All right. Hello, everyone, and welcome to our presentation today. We still have some folks filing in, so let me just go ahead and get my slideshow set up. And we're going to go ahead and start. Now, one of the things about when I start this type of a presentation, I tend to just keep talking and talking and talking. So I do want to take your questions. Please hold them at the end. We're going to talk about trend and momentum trading, and I want to introduce you to this Rhymes Range Bar Sniper. It's a trading assistant for you. I'd like to thank Agena Trader for their commitment to trader education. This is greatly appreciated. It takes time and money to put these things on, and thank you, Agena Trader. All right. Now, we're going to talk about the next level of trading education where the power of trend and momentum trading is placed directly on the chart. Specific entry, specific protective stop, trailing stop suggestion, and immediate ideas for testing. Okay. I will give you a brief overview of trend and momentum trading, and we'll look at some live charts because seeing is believing, right? And we'll talk about demonstration of trailing stop in a semi-automated trading environment. Before I go any further, let me remind you that trading financial stocks using contracts, options, stocks, futures, anything, only trade with money you can afford to place at risk. Past results do not guarantee future results. Please consult a licensed professional prior to trading using real money, and paper trade to learn any new concepts. Paper trade regardless of your level of expertise. Now, a little bit about me. I've been doing this for quite a while here, over 25 years. In 2008, I started Hit the Mark Trading, a teaching newsletter with trade strategies called In Advance so that people can see the concepts work. In 2013, folks wanted a video format, so I do written and video format. I typically will give 4 boot camps a year on position trading and 4 boot camps a year on day trading, just day trade. Now, by far, everyone wants to take the just day trade course. I guess there's more day traders out there. We happen to have a course coming up next week, tomorrow, which I'll talk to you about. I've got personal experience on stocks, bonds, options, futures, Forex. I've even traded Japanese bonds, various indicators experience. I've done public speaking at conferences, and I've provided numerous webinars for traders promoting what I consider relaxed, simplified trading. Now, this is me, and behind me is a selection of about 300 orchids I have. I live in sunny Southwest Florida, perfect for growing orchids. This is my trading chamber at my house, okay, trading room. And if you're interested in more about Hit the Mark Trading, go to hitthemarktrading.com. Remember, I created this due to what I felt at the time was a lack of straightforward trading methods. And my number one mantra is to keep the trading simplified. Simple works, and especially in day trading, because day trading is the most demanding. Absolutely. You've got to keep the trading simple so you can react. And believe you me, the professionals are not using complex strategies. Now, in everything we do, we look at the charts with an all-encompassing point of view: price action, trend and momentum, a price oscillator, and market linkage. We want to be aware of market linkage. If you have not done so, please sign up for my morning client letter. I'll give it to you for free, about 30 days. No credit card required. If you've already done this, then, thank you, I appreciate it. Thanks for reading, but I only want this free 30-day subscription for folks that are totally new. So what do I do in this? Well, I try to point out what I believe for the day is important to traders. So I'm looking at the news in the overnight, looking at charts, and I'm saying, okay, well, last Friday, for example, I suggested some instruments for day trading, including soybeans. And if you looked at last Friday's trading, soybeans had a tremendous drop. So beautiful range for anyone who maybe I helped, maybe I gave a heads up just with that, okay? Tomorrow, May 15, I start a live session of just day trade. And you can find this page with a lot more information at hitthemarktrading.com. Okay, so everything I present today is absolutely a part of the course. The course is going to be minimum 6 hours. 6 hours of total intensive. We break it up over 3 days, 2 hours each day. And each night I send you the recording of what we talked about. And then you've got access to that recording for a long time. Anytime, 24/7, you can look at the recording. Because you're not going to pick up a trading idea at one setting, let's face it. Okay? So again, you can go to the website, hitthemarktrading.com, and just click on Just Day Trade, and this page will pop up. All right? Really a great course, and I'm not just saying that. Now, the Rhymes Range Bar Sniper Package is an add-on feature for a GINA trader. And what it basically does is puts the power of automated trading strategy in your hands. So today's charts I'm going to show you were created with a GINA trader. I use range bars, but the methodology is robust to use on any time frame chart. Now that means tick, volume, Renko, time bars, anything. All we ask for is momentum and a trading range. So a lot of my clients who trade Forex will use the strategy watching the hourly chart, a 15-minute chart, and a much shorter term chart. And then some watch the 4-hour chart, okay? I have people that, even though I use range bars, they're going to use this on, they'll use this on a 5-minute chart, okay? For equity index futures or something else. Bottom line is, it's robust. And that's why I want you to test the information I give you today. Test it on your own time. Prove it to yourself. Let it see if it speaks to you. Now, what if you had a trading assistant? The trading assistant monitors the markets and calls out setups. I mean, how simple is that? What if all you had to do was scan the suggested setup and either agree or disagree? Would your trading be more relaxed? Do you think that maybe you could let the market come to you? Do you feel like maybe you could relax a little bit more, maybe even follow more markets without having to dart your eyes constantly from screen to screen? Well, that's what the Rhymes Range Bar Sniper Package does. It's semi-automated trading. That means it shows you the setups. It's got the protective stop built in. It's got the trailing stop built in. It's got the entry built in. All you do is you look at it and say, no, I don't want that trade. Or you say, yes, I want that trade. Okay. So I'm going to show you, I want to talk about this first, and then we'll go into the methodology, one methodology, so that you can immediately start testing manually on your own. But I believe the power of this automated strategy, semi-automated, is compelling. Now, use of trailing stop using the logic of large initial stop followed by tightening of protective stop as the trade moves in your intended direction. Okay, I'm going to show you this. You'll have the ability to monitor multiple markets, monitor multiple chart time frames, This is why the Forex people like this stuff. The software simply scans signals. Now, there are 16 criteria checked. Obviously, in our time today, I don't have time to cover what I cover in my 6-hour course, but everything covered in the 6-hour course, almost everything, is included in this package. So the orders are preloaded when conditions are met. All you do is just say, okay, yes or no. So you're the trader in command. Your assistant can even automatically size the orders if you want to. That means the software looks at your account balance and based on what you have decided, will allocate so that when your position grows, automatically you'll be trading more contracts. If you see a decrease in your account, automatically you're going to have your trading assistant reduce the number of contracts. See? All of this is your input according to your risk tolerance. And the folks at AgenaTrader are there to help you work this stuff out. So you are basically left to simply trade the markets. And how wonderful that is if you can just focus on trading the markets rather than all these other inputs. You're the trader in command always. The AgenaTrader gives you basically a money management back office, meaning that you've already predefined the details. And all you have to do now, your number one responsibility is finding moving markets. That's your only responsibility. And then deciding when the trade is suggested whether or not you like it. You either enter or decline. If you don't feel that good that day, fine, don't take any trades. Bottom line is AgenaTrader, when you say yes and enter the trade, it takes care of everything else. So it will shorten your learning curve, I believe. If you're not familiar with AgenaTrader, they give you a 30-day trial. The Rhymes Range Bar Sniper package comes with a 14-day trial. If you don't like it, after 14 days, you simply ask for a refund. You can either buy the thing or you can rent the thing, whatever you want to do. Run your test, extensively test it, gain a quiet confidence, and then suddenly wash, rinse, repeat, just like the professionals. Wash, rinse, repeat. Now, let's go into what is momentum trading. The art of spotting a market, ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. Momentum trading builds off a firm understanding of support and resistance, along with known areas price is attracted toward moving. Momentum trading is trading directionally up or down rather than reacting to what might happen. You're simply riding the price wave. And this is usually accompanied by a price oscillator. We can use momentum trading for intraday. We can use it for short-term trading, holding over a few days or weeks. Today is about day trading. Intraday uses a daily chart for the big picture. We're going to use a short-term chart for tactical entry. As a general rule, the more volatile the market, the smaller the time frame. We are in markets today where if you leave the desk and you go to the kitchen and you make a sandwich and you come back to your desk to eat at the desk, the market can have it might have already moved 100 ticks on the YM. I mean, this is a very, very volatile market. We know that markets move 3 directions, up, down, and sideways. If the market is sideways, we are greatly challenged unless the range is large. So it is absolutely imperative to find moving markets. Let me give you a great example. What is the absolute worst time for trading equity index futures? I believe it's the first 2 weeks of August. Europe is on vacation. USA traders are on vacation. So you see an incredibly tight range more often than not in equity index futures during that time. However, crude tends to move. Gold tends to move. So my point here is, if you insist that all you're going to do, for example, you're only going to trade ES, you have suffered through those days where nothing happens. I know that. I've done it myself. If you have a confidence in your system, you understand it should work on anything. If it does not, it is not robust. So find moving markets. Now let's talk about an oscillator. Oscillators derive their power from price movement. So for this reason, I believe you really need to understand how to read price action at support and resistance areas. The oscillator then provides a trigger point for entry. Now this is what most traders look like when trying to figure out which oscillator to use, and then when they are so confident about what they're using, right? Do you remember the story about the 6 blind men who each of them felt a different part of an elephant, and every one of these guys was convinced they knew what they were holding? The guy in the back says, I got a snake here, right? Well, he might have in trading said, you know, slow stochastics, this is the only thing I need. This is it. Another guy might say, well, no, I've got an expensive proprietary indicator. It costs so much money, it must work, right? Another guy says, well, no, Bollinger Bands. Bollinger Bands is the best Bollinger Bands. Another guy says percent R. Another guy says RSI. Another guy says MACD. My point is, there are as many indicators as there are opinions, right? And basically, in a moving market, they're all going to work. In a market that is not moving, they're all going to run into some trouble. Don't forget that. Now, everyone has their personal favorite. And in the beginning, when I was position trading, I used all the war horses. I used them all. One chart, slow stochastic, MACD, Williams percent R, RSI, and I probably had the Bollinger Bands on there. But in day trading, you do not have the luxury of waiting for everything to signal the green light. And plus, some people are watching volume. So after extensive study and years of trading and my desire to simplify, I use the Commodity Channel Index, also called the CCI. So let me restate something very, very important for you. In a strong momentum market, all price oscillators work. Everything works. I promise you, everything will work. If you were to pick a couple of numbers out of the air and say, well, I'm going to look at a 7 and a 21 moving average cross. Guess what? In a moving market, it will work. Make it an 8 and an 18 moving average cross. Guess what? It'll work. I promise you, it's going to work. In a tight range market, this is where everything loses predictive value. So you need to know, number one, how to filter some of these things out. Filter out the fake signals, which is what I teach in the course starting tomorrow. But it's also a reason to monitor several markets looking for momentum. Now, the CCI was created by Donald Lambert. I've met Mr. Lambert. In a moving market, the CCI is shown to lead price. That's a big statement. Don't take my word for it. Check out John Murphy's opinion in his book, Technical Analysis of the Financial Market. This is a direct reprint here. And here's what you're looking at. He only spends about half a page on this. So don't buy the book for this. Notice that the CCI turns before prices at each top and bottom. There it is in print. That's big. What's he mean by that? Well, the CCI is turning, right? Turns, and down we go, right? Absolutely. Turns, and up we go, right? Yep. Turns up we go. Now, the problem with this momentum indicator, it'd be great if everything was 100%, but if it gets you in early, it has a tendency to maybe get you out early. So we've got, saying to go down here, but we've basically, it's like throwing a coin in the air. The coin goes up, that's momentum. Then you get flattening, and then what happens to the coin? It comes back down. So the CCI is forecasting it's going to come down. We do have a filter that helps us so that we don't exit and trade prematurely, okay? Beyond the scope of our little talk today. Now let me get this off of here. The CCI is a price oscillator. All you need to know is that we're comparing a simple moving average over a selected time span. Mr. Lambert suggested a 20-day period. For intraday use, you're going to adjust the default setting of 20. You're going to adjust it to 14. You want smaller time frames in moving markets that are showing a good range. And I also believe you should try to find out when is the rush hour and trade the rush hour instead of trading all day. So many people will make money in the morning, completely give it up over lunch, and then they become panicked as they face the afternoon trading. So what I want to show you, this is the Agena Trader charts. I want to show you first the explanation of the CCI histogram. We've got the zero line. Now this is what we call in CCI talk major support and resistance. Then we've got the plus 100, minus 100. This is minor support and resistance. We have plus 150, the blue line, minus 150. Those are important for us. Also minor support and resistance. At 200, the gold line, that's just called extremes. It's extreme momentum. So if we break through the 100, we're breaking through minor resistance. Breaking through 150 is even stronger momentum. We want to be on board with that, right? Okay. And this is gold. This is an older chart. I'm going to show you today's charts. Don't worry, I'll show you. And you can see how these things are working, right? Beautiful. And I didn't hand select this, okay? The last time I gave a presentation, I just picked up this chart and that was it. But I'll show you today's charts in a moment. Now, how do you calculate the CCI? Wonderfully, you don't worry about it. I will show you this calculation because I know the engineering types must know. They must know what it is. You can Google this and find it if you want, or you can freeze this. Agena Trader will have this recording available. You can freeze this frame and figure it out if you want to. I just figure I'm a visual trader. All I want to know is that the CCI is plotted on a histogram. Zero line represents major support and resistance. That means if you're over the zero line, you've got an upward bias. If you're below the zero line, you got a downward bias. And the 100 and minus 100, the 150 and minus 150 represent minor support and resistance. Okay? All right. Now we're going to talk about the diagonal trendline break on the CCI. This is only one of the patterns that I use, but it's very powerful, auspicious. That's the word they use in Asia. I lived in Asia for about 5 years. Very auspicious. We start drawing a diagonal trend line from plus or minus 150. Simple concepts work, and the diagonal trend line break is a wonderful tool. Okay, let's go to the live charts. All right, so This is very nice over here, this ES 10 range bar chart, because what you can see is that have we really done anything? Have we really done anything? One of the things I like to do is I like to box this stuff up, okay? And I like to box it up, and then I like to measure it. And I say, okay, I don't know if you can see that. I got a range of about $200. It says $201.28. So guess what? I really don't want to take that trade. I don't want to take that trade. In day trading, if you're stuck in a range of $200, by the time you enter on a signal, it's going to go against you. Sometimes you get lucky. Now, the logic in here is that if you are banging with a couple price bars, it won't give a signal. Well, what happened here was, let me see if I can do this. We had 1, 2, 3, and so that woke up the computer and said, wait a minute, we got 3 bars now. We're not sideways. Hey, let's do something here. And that's why this signal fired. But that's one of those things where you can look at it and say, you know what? No, maybe yes, maybe no. I don't think I will. That's the way I'd handle it. Okay, let me get rid of this. Come here. There. Now, quite a different story over here. What happened here? Sweet. What's the signal? Oh, here's my trend line. Diagonal trend line break. What's the rule? Well, if this is the 150 line where I put the X, am I above it? Yeah. Draw it down. Do we break it? Yeah. Go up. Sweet. Now that happens to be last Friday, okay? One thing about range bars that I like is that it lets you know if the market's moving or not, or simply just locked, okay? Okay, what is this? Is this a trade? Let's see here. 150, yeah. Draw it. Up we go. So chances are he was waiting on something else before he gave that signal there. Now here we are with the YM. And let me just get my time setting here. Okay. So here's 9:30. And you see what they did. You know, personally, I typically like to wait for the first 15 minutes. But what they did here was they popped this thing up. Okay, popped it up. Diagonal trend line break. Oops, should have been a, okay. There's your signal. Now what's happened? It's tight trading. It's also Monday, which tells me, I expect slow trading on Monday. And that's why normally I do not trade on Monday or Friday as a general rule. Why? When you know you're going to be slow more often than not. You get into this day trading supposedly where you don't have to work as hard, right? You just trade a little bit and enjoy your life. Are you doing that, or are you just sweating it out every single day? All right, let's look at another one. Diagonal trend line break. Looks like it's about right here. There's our signal. I think I was a bar too early, but the computer signaled it right on this second bar here. Okay. So quite a very simple method of trading, isn't it? What's this? Diagonal trend line break, right? Where's my... There's the signal. So the question is, do you like it or do you love it? Now, these, I've been watching these lately. These are swing points. I'm just doing that on my own, just watching how these swing points work. That's all that is. Simple indicator to add to this. Okay, and to the right is the NQ. Now, is there anything else that's actually moving? Well, let's take a look at CL. All right. So this is CL. And I'm not going to point out what the pattern is because it's one of the different patterns I teach here. But you see that the computer picked it up, right? Sweet. So what you say, I love you. Thank you. In fact, here's diagonal trend line break. Right? This is at 6:53 in the morning. As a general rule, here's a little tidbit for you. As a general rule, we expect a move in the 7 a.m. hour, in the 9 a.m. hour, and the 2 p.m. hour Eastern Standard Time. Now that's for US trading, okay? As a general rule, we look for a move in crude 7 a.m. hour, 9 a.m., and 2 p.m. ET. So let's examine this crude thing. And the question is, how can you stay in a trade longer? And by the way, this is pretty neat down here because you got a visual, okay? Go long, right? You got the signal showing up here, right? Go short. This might look a little busy here, but this is a trailing stop method, just one of two methods for the trailing stop that this program provides. And the thing here is it will not get you out of the trade until price breaks below. And you can certainly widen this up if you want, but this is where that long would have been taken out. If we would widen it up, maybe it'd still be in the trade. You could have easily re-entered right here. Based on what? Diagonal trend line break. Go long. And then your trailing stop works like a charm. This machine says, well, I'm assuming you're already in that trade and staying in that trade. And again, there's two styles of taking using a trailing stop here. I'm only showing you one here. All right. Looks like we got a short signal here. Did this happen while I was running in my mouth? We got a short signal. And this is a different animal here. It's not a pattern I'm talking about today, but it's just beautiful. If you've taken my course, you know exactly what this is. I got a big smile on my face. Okay, let's look at gold. All right. This looks like a minefield to me, doesn't it? Do you? Just dangerous. You got to be very, very, very careful with gold. Okay. Just remember, if it's trading in a $200 range, it's going to be tough. All right. Wouldn't it be great if everything you took all had follow through? Guess what? It doesn't. I'm sorry. Trading is no different than playing cards at the casino. You have a method, and over time, your method, your edge comes out. Notice that on this chart, getting in here short, you're stayed into that trade all the way into this bar. And that's where you got taken out. All right, what about the euro? Oh my goodness, oh my goodness. By the way, you know what I love to do on a Friday? And one thing I will trade on a Friday is the euro. That last hour of European trading. If we're in a down move on the big chart, guess what? They're going to sell it off in the afternoon of the European trading session before they go home on the weekend. They're going to sell it off. And, you know, did that last Friday. There's some buy signals. Here's buy signal. That didn't work too well. Look, it's like I got a buy signal. And then here's another one says, no, I still want to go up. So maybe let's just assume the worst. Let's just assume that you got disgusted and you said, you know, it's not going anywhere. You took a loss. Well, then you take the short and then it runs and you make up the loss. Nice. Okay, let me go back to the ES and then I'll go on with the program. Now this is the 10 range bar. On the YM, I use a 15 range bar. On the NQ, I use a 20 range bar. Okay, 15 on the YM, 20 on the NQ, 10 on everything else. Bonds, I'll use a 5 range bar. And by the way, over here, this is where the computer is telling you when to trade or when to do nothing. You can see the only thing he's saying is short the euro right now, and looks like there's a trade on the bonds. That's 10. We actually will wait for a signal on the 5 for bonds. Okay, on the 5. But this is beautiful because now I can put 5 minute, 15 minute, 30 minute, whatever, 12 hours, whatever you want on here. Range bar, volume, whatever. And the computer is going to tell me when there's a trade. So I like that. Okay. Now I want to show you this one. Sometimes if you're wondering, is anything happening? Is there anything going on today? Well then, I'll take a look at the 5-minute chart. And so many times the 5-minute chart tells me, my God, there's just nothing. There's just nothing. So I do like to look at a time-based chart in the periphery. But there's some people who say, my gosh, maybe all I want to do is trade the 5-minute chart. Here's a loser. A lot of people are afraid to show you losers. I love to show you losers because you got to understand this is not an easy business. There's another winner. So you got 1, 2, 3, 4 trades, 1 loser out of 4 trades. That's not too bad. This 5-minute chart. Okay. So again, I see this is just really not doing much of anything from what? 11:45 to 12:35, almost an hour. It's like, would you make up your mind? Are you going to move or not going to move? Okay, let's get back to the program. So the diagonal trend line break on the CCI is an exceptional pattern for you. I'm giving this to you free as a way to give back. You do not need to buy any course. You do not need to buy any software. You can simply take what I've given you today and you can take the ball and run. My gift. No problem. There are 4 other CCI patterns I use and teach, along with other robust setups, filters, and nuances. I'd say 50% of the trades are accomplished with the diagonal trendline break. When we see a diagonal trendline break and 1 or 2 of our other patterns all together, it's a huge signal for us. But what I've given you today, very simple, allows for immediate testing. Now, years ago, I took an entire year of printing off the chart in black and white and using pencil and ruler. And this is after watching through all market hours every night, print it off, and I would say, okay, here's my diagonal trendline break. Where would I get in? Did it work? And that's why I believe in this thing so much. When you use momentum, and this is very important. When you use momentum, you are incorporating the idea that volume is coming into the market. You do not need to look at it, at the volume. I know I've lost a lot of people. Right there, they said, forget it. He doesn't want to look at volume. You got to understand the volume. The professionals know you are looking at volume. They are doing everything they can to fake you out. And they are throwing in false orders and canceling those orders. They're doing everything to make you look at the dome and get real excited and have a bias, and then they pull the orders. And the CFTC knows this. And the CFTC complains they do not have the money to stop this. So just understand, whatever you think you have as an edge, the more complex, the better. The professionals like it. They love it. But if you stick with something simple and you react and you learn to follow their footprints, I think you're going to have an edge. Now, key points to remember what I've shown you today: start drawing your trend lines at the plus or minus 150 line. Better trades are in markets showing momentum. Use the 14-period CCI for intraday below 60 minutes. If you're going to look at a 60 minutes and above, please go to a 20 CCI. Now, I suggest you trade with the trend. I teach counter trend trading, yes, and we already know where price is going to typically go. But you need to master the trend trading. There's a reason they say the trend is your friend. You can use a confirmation price bar close unless the trend is super strong. That means you get a signal and you say, okay, well, I want one more price bar to confirm. There's nothing wrong with that. Protective stop. This is the best thing I have ever found. If you're going to go long, place your initial stop below the trigger price bar or the prior price bar to the trigger, whoever's lower. That's your initial stop. You can always move that stop. But initially, you do this and you're trying to get rid of any noise that's going to whack you out of the trade. The worst feeling is to place your trade and you're using a little 6-tick stop, a little 8-tick stop, and then all of a sudden you get whacked out, and then the market moves exactly like you knew it was going to move. So practice this. If you're going to go short, place your stop above the trigger price bar or the preceding price bar, whoever is higher. Let me emphasize, this is initial stop. Initial stop. It's going to be a larger stop for you, and some people are horrified at that. But you need to see that it works. Okay? And we've modified this with that rhymes range bar sniper too. All right, so all I'm showing you here is, if you can see this, I hope you can see this. Let me find my pointer. Here's the signal. Where's the stop? Initial stop, who's lower? Well, this bar is lower. So this is gonna be your stop, just below that bar. Let's find something not such an obviously beautiful trade. Let's see, what about this guy? Where's your stop? Who's lower? This guy is lower here, so your stop, initial stop, goes below that. What about here? Here's your signal. The guy before is higher. There's your stop. Now, it turns out this was a loser trade. It happens. Over here, we get a signal with this price bar. We put the stop underneath here. Guess what? Good trade. This is all we do. Over here, here's the signal. Where's the stop? Who's higher? The bar preceding. Just put it there. Now I want to say it is the initial stop. You can, if the market moves, you can always change your stop, lowering the stop, and we call that trailing the stop. I'll go to today's charts and we'll talk about that more. Now there's several profit considerations to choose from, and this is an extremely personal choice. You decide a target. Just, you're happy with 8 ticks? Great, no problem. Some people say, no, I gotta make 15 ticks. Well, something has told you that you can make 15 ticks. You don't just arbitrarily pick that. As a general rule, I'm looking for 15 ticks on the NQ on the first contract and 30 ticks on the second. And then, of course, if the market's moving, I'll just have a runner using a trailing stop. Okay, if you are going long and you see the CCI has started turning at the 150 line, crossing back toward zero, that's a signal. Hey, momentum might be leaving the party. You can use the CCI as an exit. Or the CCI crosses the 100 line. That's minor support and resistance. Nothing wrong with getting out there. That's probably where you should get out. But again, the trailing stop can be used for capturing greater gains. Now again, I want to emphasize this is a robust system across any chart time frame, across any instrument. If an action repeats, we can trade it. I do believe in day trading using activity-based charts rather than time bar charts. And the reason for that is because I've been trading time-based charts, say a 3-minute chart on the Russell 2000, and in the first minute you get this huge power bar. It's like, what happened? And you enter the trade according to your methodology, right? But you've got that sinking feeling. there's going to be pullback because the bar was so huge. And sure enough, it pulls back, it takes you out, and then it keeps going. So I like activity-based because I think it places you closer to the action, gets you in earlier for the move. Remember, I discussed no-go rules. I'm not interested in taking a trade if the range is, around 200 bucks, even up to 250, but primarily $200. I'm just not interested because I know by the time I get in, it'll go against me. So I must be strong enough to let price resolve the issue. Now, when price resolves the issue, people will say, well, you waited too late. Really? As opposed to getting chopped up, that's fine. I'll take that any day of the week. I don't like getting chopped up. And the oscillators in a tight range are going to be giving you fake signals. One more reason to get chopped up. So let price resolve the chop. This is built in, and you can even adjust it on the Rhymes Range Bar Sniper. Remember that if you tell your broker, hey, I don't want to lose more than $1,200 if I can't control myself, so just take me out of the market at $1,200. A lot of brokers will do this for you, but you got to understand it is a suggestion. It is not an absolute. If the market is moving fast, you get your statement and you lost $1,500. Well, that's because the market moved too fast. They could not take you out as you desired. And when you agree to electronic trading, you agree that the broker is held harmless of anything that happens. So remember, in day trading, we buy into the dream of financial freedom through day trading, but the reality is it's a very difficult business. Chance favors the prepared mind, so you must control your mind or you need to stop trading completely, immediately. Now, thanks for your time today. I'm going to take questions if you have any questions. I'd like you to consider going to my website, hitthemarktrading.com. In fact, let me pull this up for you. Hitthemarktrading.com. Here's the website. You go to contact, and here's the sign up for the Rooster Call right here. Okay, sign up for free 30-day period. And if you like it, great. It's cheap. What's 3 ticks? That's about what it cost. Now, the Just Day Trade, we start this tomorrow, 12 to 2 p.m. ET for 3 days. If we go longer, we go longer, no problem. If you cannot make the session, you can also get the recordings, and you're going to learn everything that I do. It's great. It really is. Okay, and this will tell you more about what's going on here. Okay, and testimonials from clients. Now, go to the client's resource page, and you can go to Gina Trader. And here is where you find out the Rhymes Range Bar, the Sniper, and the Gina Trader software. Okay, let me just quickly look at, oh, we got some signals here as I'm running my mouth talking. We got some signals here, and let's just look at this quickly. If here's our signal, where's the protective stop? Protective stop is right here, just above that. If you waited and you took this signal, the second down arrow, your stop is right just above this guy. And when I say just above, a tick or two. What you're trying to avoid is getting knocked out in noise. I like the range bars because I believe the range bars get rid of some of that noise. Okay, on that long, protective stop is where? Initially just below this line. If you went short here, where's the stop? Initially, just above the prior price bar. Guess what? This is a big loser trade. Let me write that down. I'm not afraid of showing you loser, because if you really think that there are people that have no losses, then you're being very, very, very gullible. There's losses in trading. Losses are the price of admission. Looks like we got a signal over here on the NQ. I like that. Sweet. Where's the protective stop? Initially, just above here. Notice I didn't go all the way up here. I don't need to. Isn't that nice? Okay, do you have any questions? If you have any questions, speak now or forever hold your peace. I love the trade. Look at the trade. What is this trade? Diagonal trendline break. You don't think I gave you something worth money today? I did. It's totally free. This is